Okay, Ashley, we're live.
Awesome. Hey, Parker, how are you doing today?
I'm doing well, and I have to say, as lovely as you look, I think I win for having the Go Dogs UGA hat on. You know, I'm a UGA alum. It's a big, big weekend, and I think you went. Have you done some skiing? I know you're a big skier. Like you love to live
Yeah,
on the lake. Have you done that yet this weekend?
just this morning. We went out early in the morning so that we could avoid the Labor Day weekend traffic on the lake. It was a lot of fun.
So
Slalom
do you?
skiing.
I was gonna say. So when you so you slalom.
Yes.
Okay, are you good? Like, can you do tricks?
I just this year I learned how to get up. So
Okay,
my
that's a
good is
trick.
I have a goal to make it through part of the slalom course before the end of the season.
Oh, I love it.
Yeah,
Okay. Well, I'm really excited for this session. Let me go ahead and share my screen and we can get going.
great.
Okay. Buying in today's market, creating a strategy to win the offer. Obviously, we want to share our questions. So if you have any questions at all, please make sure you follow these instructions. We'll have some time at the end. With all that throat clearing done, though, welcome, welcome, welcome. And I'm going to turn it over to the our wonderful host and realtor extraordinaire, Ashley.
Thanks, Parker. Hi, guys. My name is Ashley Smith. I'm with Virtual Properties Realty in their luxury division, and I'm a part of the Smith team that encompasses my dad, C.L. Smith, and myself. We live on Lake Lanier near Atlanta, Georgia, and love selling homes on the lake and love helping people just meet their dreams. So on the next slide, you can see a little bit more about me. Hopefully I picked some fun pictures so you could see that I love playing golf. That's actually a picture of my dad and me in the golf cart. I love traveling. Went on a biking trip in Spain back earlier this year. I'm actually going to Greece in September this month. So I'm excited about that. And love just going out to eat, enjoying good food. But as far as real estate goes, I take a lot of time also to make sure I'm staying on top of education so that I can be the very best for you. I have an ABR designation, which is for buyers, representing buyers, an SRS designation, which is for representing sellers, and a RENI designation, which is a negotiation expert designation as well. And then lastly, just a fun fact too, I just got back from Denver at a luxury conference with some other guild members from the Institute of Luxury Home Marketing. And that was a really wonderful experience where we got to network and learn so much from everybody about what they're doing in the market with luxury buyers and sellers. Parker, tell us.
Yeah, I was gonna say, I love lake dweller. That's probably one of my favorite descriptors. All right. Yeah. So, my name is Parker Couch. I'm with Homestar Financial, local lender with a lot of experience. I was a former teacher and principal, grew up in the business. My joke is, but it's also not a joke. My father, who's a division executive for Homestar, the company I work for, doing loans during the Jimmy Carter administration. So, definitely grew up around it, learned from the best. And this is my promise is to be proactive, to over communicate, and just to give a really truly a VIP customer service for all of the clients. And it's been a blast working with you, Ashley, and I'm excited for us to use not just some tips that we know work from our experience, but some tips that we know really work for our buyers based on recent experience, because the market as it exists now is very different than how it existed 3 or 4 months ago.
So different. And I do want to do a special shout out to you, Parker, because thank you so much. You and Homestar sponsoring this webinar so that we can really get good information out to potential buyers, potential sellers, and people who just want to live their dreams. And part of that's through buying and selling real estate. So thank you very much for sponsoring this event today.
Of course. Can't wait to keep doing them.
Yeah. All right. So today we're talking about buying a home in today's market. And so our goal today is to provide you a strategy to buy this home. We'll be covering what you need to know to get pre-approved, and that means you'll have a better chance of winning your offer, and you can feel really confident in that. And hopefully by the end of today's session, you'll understand a little bit more of the home buying process and know what kind of documentation is going to be needed to qualify for a home loan. If we don't answer those questions for you at the end, make sure you include those in the question comments at the end, and we'll readdress them. Okay, so what is happening with home prices this year? Everybody's wondering, after COVID, the time of COVID and the pandemic, when the house prices kind of skyrocketed to crazy amounts, what's going to happen? And a lot of people who are interested in maybe buying a home are really tell me that they're hesitant because they're afraid that the market's cooling down too much, that their home prices aren't going to appreciate well. And also with the mortgage rates having been rising, they're a little bit nervous. So we want you guys to know that there is no need to be nervous here, at least based on some projections from, these are top industry experts who are making projections about appreciation of homes over this coming year. And this is a very conservative appreciation projection, but on average, the average of these projections is 6.1% your home's going to appreciate. And actually here in Atlanta, and especially in North Metro Atlanta, which is where I focus, and on the lake, that appreciation number, even historically before the pandemic, was higher than 6.1. So I expect that we're going to see that as well. And I think,
and to jump in really quickly, Ashley, like, I think that this is I just want to emphasize, I have a visitor, real fast. Notice my daughter Marley just came running in. Marley, I am talking about how homes are appreciating in value. Isn't that so exciting? All right, Ashley, I'm going to go ahead and go to the next slide. You keep going.
Sure. And I just want you to take from that, though, don't wait for prices to drop because you think homes are going to be more affordable in a few years, because what we're seeing is that the prices are going to continue to go up as you want them to. That's why we buy homes. It helps build wealth over time. So so our key takeaway from this is buy a home. You definitely have a great opportunity. It's a very smart move today. And also, we'll talk about this when we talk about choosing your mortgage option, but it's a great way to secure a stable monthly housing payment. And in that way, you can grow your home's wealth over time. The most important part, though, is right here. We've got to have a strategy for buying this house in order to win and get your home. So in our strategy, we have a few steps along the way. The first one is very important, have a strategy meeting with me, with your agent, and with a loan officer, maybe Parker. The reason it's important to have this conversation together is that we need to talk about what your home buying goals are. Is your goal to just own a home and to grow your family in it? Is it to make money over a shorter period of time? Is it an investment home? All these things we'll talk about. During that meeting, we talk about you getting pre-approved for your loan. And also, in a little bit, we're going to talk about the difference between a pre-approval and a pre-qualification. But what's important here is we're going to get you pre-approved in our meeting.
And Ashley, and something to jump in really quickly about like the importance of a strategy meeting. When the market was at its absolute craziest point about 1.5 years ago, this type of meeting was like, you're not going to win an offer and get into a home unless you have an agent who gives you a really, really sound strategy and you execute on that strategy. That being said, I would just encourage everyone that even if you're living in a part of the state or even a part of the country where the market's starting to really, really cool off, this is still an essential step. Just because you don't have to be as cutthroat in your strategy as you were 1.5 years ago doesn't mean that having a really sound strategy isn't important. It is incredibly, incredibly important, because as the market cools off and becomes more balanced between buyers and sellers, this is a great opportunity for you to use that strategy that's set up by an expert realtor like Ashley to really, truly get the absolute best deal for whatever home that you're going to buy.
Yeah, and the strategy kind of, when we talk about your goals, then we'll know better how we can negotiate best for you, what type of mortgage is going to be best for you. And we'll talk about these in the next few slides, but that's very important. So thanks for reiterating that, Parker.
All right, so step 2, and I think this is a part that not only do a lot of people still get confused about, but in full transparency, I think a lot of loan officers will even get confused. There is a difference between being pre-qualified and pre-approved, okay? And without just reading bullet points to you, here is the big difference between being pre-qualified and pre-approved. A pre-qualification letter, or being pre-qualified, is essentially this. Based on what you have told the lender says this is how much you can buy. That's pre-qualified. It's what you tell. It's what you put on your application. Pre-approval is not just based on what you're telling the lender and putting on the application. Pre-approval is the lender verifying what has been put on that application. So if you're putting that you got $50,000 in the bank on your application, Pre-qual, the lender doesn't have to verify it. Pre-approval, the lender needs to actually put eyes on that bank statement. Same with income. If you say you make $10,000 a month, well, that's great. But if you want that pre-approval letter, the lender is going to need to actually verify based on W-2s and pay stubs that you actually make that much money. So it's a big takeaway here. Big takeaway is you don't need to settle for a pre-qual letter that you get generated in 10 minutes off like rocketmortgage.com. Go through a rigorous pre-approval process on the front end. That way you can truly make competitive offers and stand a chance to win an offer and to get into a house.
Yep, exactly. And that next slide actually shows like a good example of the things that are required for the pre-approval. And I want you to notice those stars on the side, because I like to think of it like this too. A pre-qualification is kind of like getting a 3-star review. I don't know about you, Parker.
Ooh, I like that. That's a really good. Can you say that one more time, Ashley? I think that's a great analogy.
Yeah. A pre-qualification is like getting a 3-star review. And like I said, I don't know about you, but I'm never going to be okay or satisfied with a 3-star rating. In fact, I'd be quite disappointed with my service if that's what I got as a review. So what you want is the pre-approval, which is like the 5-star review. And then the seller and the seller's agent, who I'm working with when I'm working with you as a buyer, knows or feels very confident that you actually are going to be able to pay for this house. And that is going to make you have the strongest offer.
Ashley, so something I just thought, I know you love to travel, but whenever you go to a new city, I don't know about you, but I always go on either like Yelp or TripAdvisor, especially if I'm trying to find a place to eat. And I just imagine going to a brand new town or brand new city, pulling up Yelp and being like, guys, did you see this restaurant? We should totally go. It's got 3 stars, right? Like that never, what do? You always filter by the stars, right? I'm kind of cheap. So I'm like, what place has 5 stars, but $1 sign?
Yes.
But no, I think that's a great point of what you're making, to where it's not that people aren't eating at those 3-star restaurants you're seeing on Yelp, but most of the foot traffic and the more appealable and probably more profitable restaurants are going to be the ones that actually have those 5-star reviews. So make yourself stand out, get pre-approved. Don't just get pre-qualified.
Yeah. And again, this helps the seller have confidence that you're going to be the best buyer for their house, and they'll most likely accept your offer, and it can set you apart. So there's a story that just happened to us recently where I had a client who was super pre-approved by Parker really early on in her home buying process. And when we found this home that she really loved, we submitted the offer with her pre-approval. Parker called the agent, even talked to the agent about how great she was pre-approved and she's so ready to buy this home. But unfortunately, the seller chose another offer whose offer stated that the person was pre-approved, but in the end, like the next day after they went under contract, couldn't get the funding or the mortgage that he needed, because in order to pay for his down payment, he had to pull money out of his investment accounts, which messed up his debt to income ratio. I believe that's how that works, right, Parker? So unfortunately, also for the seller, my client had already moved on to another home, which, by the way, she has closed on and is renovating now and is really excited to live in. So too bad for the seller.
Hey, Jamie. Sorry, we're not saying last names, but hey, Jamie.
Too bad for the seller, but great for Jamie that she actually is in a home that she loves too. And those are the types of things that when you have a phone call, when your agent hopefully is having a phone call with the loan officer for the buyer, that they're asking those questions, so are they going to be able to afford this loan even with the down payment? How are they paying their down payment? And making sure that they're really, really ready to buy. Okay, so homes buying strategy step 3. It's really important. This is something we are probably going to do a whole First Friday webinar on. Parker, you get to be the star of the show on that one. But step 3 is knowing your options. What kind of mortgages are available to you? So what I'm going to expect from the loan officer who's working with my clients, and Parker does an amazing job of this, is to talk about the types of mortgages available to them, and then also discuss what the pros and cons of each one are, because sometimes one or not just one could work for you. So then we decide what is going to be the best for you as far as maybe how much money you have to put down or how much your monthly payment is going to be. So Parker, would you kind of go through some of those?
Yeah,
examples?
absolutely. And let me recenter us here. So, okay. So, when we're talking about mortgage options and we're talking about loans, here, there are two big buckets that I want everyone to wrap their mind around. You have something called QM mortgages and non-QM mortgages. All right. QM means it's a qualified mortgage. And when we talk about a qualified mortgage, we're talking about mortgages or loans that are either insured or guaranteed by the federal government, or at the very least, heavily regulated by the federal government. Okay. Also, when we talk about a qualified mortgage, we're talking about mortgages that have a maximum loan amount of $647,200. There are some exceptions, like if you live in California, for example, but for the most part, a QM is going to be a conventional loan, a VA loan, a USDA loan, and an FHA loan. All of these loans have different benefits, different perks, different restrictions, but they are absolutely going to be the loans that will have the most red tape, sure, but will have absolutely the most generous and appealing rates, terms, all of that. Now, on the flip side, you've got non-QM. All non-QM means is that for whatever reason, it's not fitting in that qualified mortgage bucket. It's not a conventional loan by Fannie Mae and Freddie Mac. It's not FHA. It's not VA. It's not USDA. Non-QM loans can come in different shapes and sizes. But for if you're trying to buy, let's say, a home on Lake Lanier, unless you've got a significant amount of money to put down, you might actually need something called a jumbo loan. And a jumbo loan is where the loan amount, how much you owe to the bank, is going to be more than $647,200. Now, there are a lot of creative ways and things that we can do to get you down to the conforming loan limit. And that's at $647,200 number I was talking about. But here's the big thing I want everyone to take away from is that if your head is spinning based on what I just said, that's because there are way more mortgage options and way more, not mortgage options, way more loan options, way more loan programs, way more loan products than most people ever realize. If you've ever bought a home before, maybe you went to your local bank and they was like, here's your loan. And you maybe didn't even know that there were other things that you could do. Maybe you're like, well, I guess I have to put 20% down. And so the things about exploring your mortgage options is exactly in the title. Options, right? Yeah. You have options, and make sure that whatever lender you go with, hopefully it's me, but whatever lender you go with, make sure that that lender is presenting you at least more than one option. I can't tell you how many horror stories I hear, Ashley, of folks who will come over to me not happy with their other lender. And I'll say like, oh, well, have we thought about doing X, Y, and Z? And they go, wait, what? I could do that? I don't have to put that much down? I'm like, oh no, you're in a USDA territory. Like we can do a USDA loan. There's no money down. And I go, well, my other lender didn't even think that was an option. I didn't even know that was an option. So make sure that you really ask the right questions and make sure your lender is presenting to you at least more than one option, because there are almost certainly going to be more than just one option out there.
Do you think, Parker, that sometimes if a loan officer is not presenting more than one offer, is it because of lack of knowledge, or is it like lazy in the sense that, hey, this will work for most people, so I'm just going to make it work for this person?
Yeah, that's a really great question. I think that every lender is different. I think for some lenders, it is a lack of knowledge, mainly because it's in a, let's say, for example, if you're living in downtown Atlanta and you've got somebody who's wanting to buy in Winder because they want to, buy a home that's closer to Athens.
Sure.
Well, if you're a lender and you live in Atlanta, you probably haven't done many, if any, USDA loans. So you may not even know that a good chunk of Winder is actually in a USDA eligible territory. So that would be one example of just like a lender, like, oh, well, I've always done this loan because this is the loan that I've done. Now, in reality, oftentimes you only present the client like, hey, this is the loan we can do, because at the end of the day, and this is just unfortunate reality, time is money, and I work on commission. I know you work on commission, Ashley.
Yeah.
And so oftentimes it's just way less time intensive to present the customer with a ton of different options, because a ton of different options means a ton of different conversations. In my mind, I just ethically believe in the power of a well-informed and empowered consumer. Because at the end of the day, yes, it is a lot of more work on the front end, but one, it's almost always a much more positive experience for the customer. And then two, that hard work that you're doing on the front end, you save yourself time on the back end because your customer really, really knows what they're buying into, and they really understand what they're signing on to. So did I answer your question?
Yeah, you did. Thank you. And just as another thank you, you just reminded me of our most recent closing that we had was an example of a multiple conversation options.
Oh yeah.
For our buyer, and she is so happy to be in her home. But Parker took a lot of days of extra time out of his normal time that he would have spent with her to make sure she had the exact right loan for her situation. So thank you, Parker.
Well, I will say too, Ashley, that me doing that, a lot of that was driven by the hard work you did on the front end when bringing this client to me, because it was made very clear to me the goals of what this client was trying to accomplish. It was also made very clear to me by the client that she had X amount of money and she wanted to hold on to as much of that money as possible because she knew at the price point she was buying in, she was going to need to do some renovations to the house. And so I found a very easy way to make it work and get us to the closing table, but it was going to require burning like 80 to 85% of the money that she has on hand. And so that's where I just kind of made the decision. It's like, all right, do I just like let her know, like, hey, this is the path, this is where we're going, knowing that that's not going to meet her primary goal, which is, yeah, to get into a house, but to have enough money to renovate? Or do I try to be creative, burn some time, but have a more satisfied, client? And I would hope that whatever lender folks watching this go with, that whether it's me or not, that if you let your lender and your realtor know these are the main two things that I'm trying to accomplish, yes, that they really hear you and they really listen to you, because oftentimes fastest is not best. And so just keep that in mind. Yeah. All right, step 4, getting your finances in order. So I want to tackle this one because it's about, money, getting your down payment ready. So when we're talking about down payment, oh man, this gets really, really hairy. So let's talk about some things. One, I always get asked, hey, can I borrow money? The answer is you cannot borrow money from anyone other than you can borrow money from yourself. We'll talk about that. Or you can borrow money from me, the lender, but that's it. You can't borrow from family, can't borrow from friends. Now you can get you can get a gift from family, a gift from friends. Now I always have people ask me, well, what if I decide to pay them back like 2 years down the road? I was like, well, there's no such thing as the mortgage police, right? Like I'm not going to come knock on your door and be like, did you ever pay back your brother? No, but at the end of the day, you can't borrow money. You can get it as a gift. Now, when I say you can borrow money from yourself, Ashley, this is my favorite hack in the world. So many folks have a 401k. And so many folks don't want to touch that 401k because they don't want to liquidate stock. They don't want to have the tax penalty. That's smart. You should not, liquidate your 401k. You really should hold on to that in retirement. But 99% of all 401k accounts, especially if it's a 401k that's being funded by an employer, they will allow you to take out a very low interest loan. So you're not cashing out your stock. So hear me on that. You're not cashing out any of your 401k. You're taking a low interest loan up to half of the market value. And then you can actually reset your own terms on how quickly or how slowly you want to pay yourself back. So that's what I mean, like borrowing money from yourself. My other favorite thing about that too is it doesn't impact your debt to income ratio. So it really is true, like you acting as your own down payment assistance program. Now, some people be like, well, can I take out a cash advance on my credit card? It's like, well, technically, yes, but you have to realize that that's going to increase your monthly payment, your minimum monthly payment on your credit card, and that will show up in your debt to income ratio. Some people ask like, okay, well, I have a HELOC, a home equity line of credit attached to one of my houses or attached to my main house. Can I take money for that? The answer is yes. And it's actually a really great strategy, getting money for a down payment if you have a HELOC in place, a home equity line of credit. But you have to remember that if you're maxing out your HELOC, let's say you're borrowing $100,000 from your HELOC, that's going to be a minimum monthly payment of probably at least $300. So the only way to really get money for your down payment in terms of, I say getting money, it's money that you don't already have. It's money that you're borrowing. The only way to do that without it impacting your debt to income ratio is going to be that 401k loan that most employers offer. Other than that, here's the bottom line. Make sure that you've got the money. If you want to know how much you need to have, well, first off, find out how much money you're putting down. If it's FHA, you're putting 3.5% down. Conventional, you're putting 5% down, maybe 10, maybe 15, maybe 20%. And that's of the sales price. And then you need to budget anywhere between 2 to 3% of the sales price for closing costs. We are having some sellers pay closing costs, but still, for the most part, if you're a buyer, just add 2 to 3% on top of whatever your down payment percentage is. But you got to get your down payment ready, and you got to have that conversation before you're through due diligence and you're 2 weeks from closing.
Parker, can you explain also, when you're working with the clients, you usually give them a form or like some type of calculation that shows them, hey, if you get this loan, if you put this much down, these are going to be your extra costs that you'll need to bring to the closing table. So they know that in advance, right? It's just important for them to recognize that it's not just the down payment they're bringing to the closing table generally. That's
exactly right. Yeah, and I'll give them something called an itemized fee worksheet, which will give them a good idea of how much they're going to have to bring beyond just their down payment, for sure.
Great.
All right, selling your existing home.
All right, so obviously, well, maybe not obviously, but most people who are buying a home are selling an existing home and then switching homes. A lot of our clients actually some of them are first-time home buyers, so they're not selling an existing home. And many of our clients are buying a second home, so they don't need to sell their first home either. However, if you fall into that bucket of probably the normal American who is moving to a new home and therefore will be selling their existing home, you need to have a strategy. That's kind of the theme of this webinar, I think, is have a strategy. So it's really important to know what are you going to do if you make an offer on a new house and then your other home hasn't sold yet. What can you work with? You can definitely work with me, but you can also work with your lender and create timelines to make sure that you're going to be able to get to the closing table with the down payment that you need, even though your current house hasn't sold yet. And also then know that you're going to recoup that money once you do sell your house. Lastly, it's really important. I cannot reiterate this enough, to work with an agent who knows the market well, because you need a good plan to sell your existing home and to buy the new home. I just worked with some clients who I helped them buy a home, and then they saw the value I was going to add for them and asked me to sell their home, which I'm thankful that they did. I was hoping they would after we built such a strong relationship. But it's so important to have someone who's going to be able to get you the most value out of your home when you sell it, not just sell it because it's a quick commission, right? I could have sold their house for at least $40,000, probably $50,000 less. They would have been very happy with the amount of money that they made. But now they have this extra amount of money in their pocket that they can put into renovating or updating their new home, or put into savings for their young children for going to college in the future, or so many other things, savings in general, investing. So it's really important to work with an agent you know and trust and know who's going to give you the best value. Also, it's going to be really important to, this is kind of part of that, like thinking about your down payment and how much cash you have, what you have available to you. We need to be realistic about what you offer, because sometimes there are things that you'll have to pay additional money for once you get into your home, whether that's repairs, maybe you want some newer updated appliances, maybe you need different kind of furnishing because the kind that's in your house now is too small or too big or doesn't look right in the home that you're getting. So just knowing how much money you want to have aside before you even consider what your down payment's going to be will help. And of course, that's like a house-to-house situation as you decide which one is your dream home. But when you do, knowing that you have that money. And then I really think you can be really comfortable if you have a good plan, if you're working with a strong, experienced agent who's on your side, if you have a great lender who you know is going to work for you and not just work to get you a loan. So meet with your agent, meet with your lender and set that strategy. Get pre-approved before you put an offer in. Get your finances ready so that you know when you put your offer in that you're not trying to figure out how you're going to get the money that you need for the different things. And then stick with your plan. All right, you can switch the slide.
Oh yeah, I was sorry, I was
Oh.
I was on mute because my 4-year-old's stomping around upstairs. And when I say like stick to the plan, okay, so it's Georgia, it's UGA, right? I actually think about the national championship. We won the national championship last year, and there was a plan. Even though Alabama had just a monstrous defensive line, like our identity as a team is we run the ball. And so we ran and 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 we ran. And we had very little yards to show for it at the half. We had very little yards to show for it in the third quarter. But here is the strategy is finally when that fourth quarter came around, what happened to that big, amazing Alabama defensive front? They got tired, right? And the only way they're going to get tired is if you continue to run the ball at them. Mm-hmm. And so what ended up happening? Well, had a massive fourth quarter. We were able to actually run the ball effectively. We were able to then control the time of possession, and we won. So again, we got our football. It's college football. It's officially kicked off, but there is this stick to the plan that Ashley just said. It's so true. Even if it feels like the plan isn't working, you're not going to know how good a plan is until you truly stick with it and give that plan a chance to be successful.
It's a great analogy, Parker. All right, let's talk about tips to making your best offer. The first, of course, is know your budget. And this is really important and critical to your success because the budget's going to help you know how much, again, you can get pre-approved for. It's going to help you know how much down payment you're going to put down, how much extra cash you might have on hand to put into repairs. But also, in addition, while you're getting pre-approved, you might be approved for an $800,000 home or an $800,000 loan. But what if you only want a loan for $500,000 because you want to keep your monthly payment below $4,000 a month? Those are really important things to consider. And please remember that getting the pre-approval first is very important. It shows the seller that you're a serious buyer. And that's what's going to give us the competitive edge. Second, be ready to move fast. So the market is not going so crazy where homes are selling in one day right now, thank goodness. But if you like a home, waiting to put an offer on it is really putting you at a disadvantage too. So you need to know that just this year in January, 79% of the homes sold within the first month of being on the market. So again, if you want the home, put an offer on it. The sellers, if it's a good offer, the seller will take it. And you don't want somebody else coming in saying, oh, I'm just going to put this offer in, and then the seller taking it because they haven't gotten yours. And again, work with an agent who knows how to make a good offer for you so that you can feel really confident that you're going to win.
Love it. Totally agree.
Yeah.
And then tips to actually making your best offer. I know, but I'm going to jump in here just for a second,
Yeah,
Ashley.
of course.
So with this, I just want so Ashley interacts with a lot of agents, obviously, but she doesn't really interact with agents in the same capacity that I'll interact with as a lender. And I am blown away in a bad way how oftentimes I'll interact with realtors who have no idea what they're doing. I think there is a false narrative out there that, oh yeah, being a realtor, you just got to pass the test and get your piece of paper license, and then you can go get people into homes. And folks just don't realize how invaluable an experienced licensed real estate professional is, because you can really, really hurt yourself if you don't actually do your due diligence and find a realtor. That's the reason why Ashley talked about her credentials, because those credentials are hard to get. She not only got her license, but she got those credentials too. Anyway, Ashley, enough of my soapbox. You keep going.
Thanks, Parker. So, and we talked about the licensed real estate professional, but I would encourage you to interview or talk. You don't have to interview lots of people. You'll know it when you know who's the right person for you. You will feel it in your gut. This person's going to take care of me. This person knows what they're doing, and they've shown me and demonstrated to me how they're going to do these things to make sure that I will win and have the best experience possible in buying a house. So also the reason to work with an agent is we're really experts in your local real estate market. So you might know kind of what's going on in your neighborhood. Your neighbor might have said, oh, we sold this house for X amount of money, but we know so much more too about what has worked for other buyers in the area when they're making their offers. We know what sellers are looking for in an offer to make it strong. And we will help make sure that you're catering to what the seller needs so that your offer stands out. Another reason is a lot of times when you're selling or buying a home, your emotions, it's a very emotional, not even a lot of times, selling or buying a home is a very emotional decision and a very emotional process. So your agent's here to not let your emotions get in the way of making a strong offer and a fair offer. So you really just lean on your agent to help you through all that. We definitely with the Smith team are always working with our clients to help them feel the most comfortable through this process so that they do not have to feel stressed out through it. And lastly, it's really important that you are a flexible negotiator. Now, of course, your agent's going to do the negotiating for you, but what your agent needs to know as a part of your plan is what are things that are non-negotiables for you and what are things that you'd be willing to kind of flex on a little bit that the seller doesn't know about, so that when we're negotiating, the seller thinks you're making a big, giving a lot away, but you're really not. You're giving a really small thing away. And it's really just knowing that you can be flexible, and that's going to help you win a lot of offers too. All right, and then of course we have to be realistic about our expectations. But if you know what to expect, if you've made a plan, if you've told your agent what are your non-negotiables, you'll win. You'll be able to outshine the other offers and be able to get the home you want. And sometimes it does take time, but I think what's important is to know that as Parker and I are going to be here all along with you for your journey to getting your dream home. And even if it takes a little while, the house you'll end up in is going to be the one where you didn't have to settle, and you'll be so happy. At least that's our goal. And Parker,
sorry, I'll get better at that, I promise. I got 2 questions for you that came in. All right.
Oh,
question. Yeah. So question number 1, Ashley, these are a little bit tricky because they're going to be nuanced. All right. So question number 1. I hear that the market is cooling off. Is it safe to ask for sellers to pay closing costs, or am I just wasting my time?
Yeah, well, I hate to answer it like this. I feel like a lawyer, but it depends on the situation. It depends on the seller, and it depends on how many other offers are out there, right? I will say in the past 3 offers I've worked with buyers, we've asked the sellers to pay some closing cost, and they have agreed to do that. So it really depends on all those things. But another thing it depends on is the relationship that your agent is able to build with the other agent, because then they can have like a real adult conversation about what needs are to be able to make the deal happen. And I think that helps a lot. So I hope that answers your question. It depends.
All right, we got another question for you. So second question is, back when I bought my second house in 2016, I had to sell my very first home in order to buy the home I'm living in now. I've heard that over the last 2.5 years, it's almost impossible to go under contract if you have a sales contingency. Is this still the case, or can I go under contract for a new home with the sales contingency on the home that I'm currently living in?
Ooh, okay. Hate to say it, it's the same answer. It depends. I will say that even that this is a tougher market still, it's still a seller's market. So that means there's fewer homes available than there is buyer demand. However, if again, your agent can have a good conversation with the listing agent about your situation. Hey, they've really got to sell their house, but look, here's where it is. Let me show you their home. Let me show you the comps on this. And we'll be able to sell it, no problem. That you really need to rely on your agent to have a good conversation with the other agent. And if you can, a lot of times they'll think it's a very reasonable and fair deal. They may ask you to do something like give some option money that's non-refundable if you back out of the deal. Like let's say your house doesn't sell. as a way to reimburse the seller for having their house off the market while they were under contract with you. But that's an example of like giving some so that you can get the thing that you need. And again, it depends, but I definitely think it's possible in this market.
Awesome.
Yeah.
All right.
All right. Well, next step here is if you have any questions, please feel free to reach out. But more importantly than that, we'd love also for you guys to be interacting with us on our social media sites, or ask questions there. Introduce your friends to us. Make sure you're on our next webinar in October. What's the first Friday in October, Parker?
Oh, good. And I know it's Saturday today, y'all. We had some technical difficulties due to traveling yesterday. So had to address that elephant in the room. Our first Friday in October is going to be October the 7th.
Okay, October 7th. So we'll see you then. And we are hoping that we'll be wearing our Braves gear, cheering them on for playoff time. So fingers crossed, that's what's will be happening in October. And then anything you guys need, just reach out to us. Again, there's our information, firstfridayrealestate.com. You can find the handout for this session and also our previous sessions. And I believe maybe even watch our previous webinars.
Yeah.
Thank you so much for attending. And then I hope there's another slide on there, Parker, that thanks you again.
Yeah, it is. I know.
A big
You're
thanks
so sweet.
to our sponsor, Parker Couch. Again, a lot of my success in real estate due to Parker and his hard work with my clients. And also he's a big cheerleader for me. So thank you, Parker. Thank you for sponsoring this. And we look forward to seeing you guys next month. Yeah,
I'm excited for First Friday, October edition. Get your Braves gear on. Maybe we could do like some Braves, some like spooky, like a witch, if only we could find like a Braves witch hat. We'll see. I'll see what we can do. All right, Ashley, it was great talking with you. I'll talk to you soon.